focus and understand. I have just recorded also so that students who are not there, they can listen to the recording. So financial analysis. So this is what you should be knowing, okay? As a lawyers, you should be able to read balance sheet, profit loss account, and understand, what company is doing. And from all this, you can, find out the weakness and strength of the company, okay? So it will help you basically to do your job better when you become lawyers and either you're practicing or you're working in some company. So it will all help you a lot, okay? Financial analysis. So we know that companies are required to make financial statements. Okay, the first one is the balance sheet. Okay, the first statement which they make is called the balance sheet, and the second is the income statement. Rather, we should say income statement first, and then the balance sheet, and finally a cash flow statement. So these are the three statements which companies are required to make. Okay, these are very important statements. We will do some exercise over today in the class using Excel sheets to understand the real companies how they are performing. Then when you are making a balance sheet, when you do business, you need money. Okay, when you do business, you require money, and the money can be contributed by owners, and it's called the owner's equity. Okay, the equity share capital of a company given by the shareholders, so it's called the owner's equity. So either they take the money, I mean, they contribute the money themselves, or and then of course they can even borrow money. Okay, then they buy assets for doing business, isn't it? When you start a business, you need money, and then you are going to invest into assets, which are going to be your machines, equipment, your computers. Okay, either you are providing services or you are providing goods, so you need assets to do your business. Then of course you have some liabilities also. Either you buy assets, you don't pay them immediately, you borrow money, okay? So these are liabilities. So a balance sheet would look like this. So it will have equity share capital, it will have assets and the liabilities. So all will be equal. So assets, owner's equity plus liability will be equal to assets, okay? Then the income statement. Because when you do business, you make a sale. That's your top line, your sale, okay? Your major source of money by selling your products and services. Then the cost of sales, which is basically the opening stock plus goods you have purchased minus the closing stock if you are a trader. But if you are a manufacturer, you buy raw material, convert them into finished goods and sell them. So what you earn is called the gross profit. Okay, fine. Then you reduce all your other expenses like selling expenses, advertisement expenses, distribution expenses, admin expenses, rent, whatever you have incurred, printing and stationery, all the expenses which you have incurred for doing your business, you reduce that and you get a net profit, isn't it? Ultimately, business entities, they make money. That's called the net profit. The revenue which belongs to whom? The shareholders. Okay. Then the last statement is called the cash flow statement. All the cash inflows which you have got, the money which you have got from your customers. Okay. So all the money which you are getting, I mean, if you're taking a loan from the bank, so bank is going to give you money, so that will be your cash inflows. Okay, you buy, assets, so there will be an outflow. You are going to pay for your raw materials, it is going to be outflows. So then you know what is my net cash movement, what is my opening balance, and what is my closing balance of cash. So this is a very important statement which was inserted about few years back, maybe 20 years back. So earlier only we had the income statement and the balance sheet, but this statement is very important because it's very difficult to manipulate this statement and gives you a very transparent way the organization does business. So you know where the money has come from, where the money has gone. Okay. Now the cash flow can be again into three areas. Cash from operations. That means how much cash you are getting from doing a business. And then from investing. That means you're going to buy assets for doing business, you're going to invest your money in assets. And then cash from financing, which means you're taking a loan from the bank, you're repaying a loan. So all cash flows can be categorized into three broad categories: cash from operations, cash from investment, cash from financing. So all these three cash flows are stated separately, so that a person looks how much money the company has made in cash from doing the main business. So that will come cash from operations. Then how much assets they have bought, basically, to do business. So cash from investing and cash from financing, how much money they have taken a loan from the bank and how much they have paid back, okay, as you have to pay the loan after some time. So all these three categorization of cash flow is done. So we'll do understand later on, okay. But remember that we'll be, seeing the companies, their cash flows also. So that time we'll find all these three kinds of categories there. Then you have the income statement, the most important one. So now we'll dwell into each of the statement. Okay, income statement. So now income statement generally, is made in various manners. So we have seen the Schedule 3 of the Companies Act, but here we are looking from the management point of view. Okay, because the management makes a cash income statement little bit different than what is there in Schedule 3, because they have to manage the business. So that is the statutory format. Okay, that's a legal format of the balance sheet. But business houses, they make their own income statement in a format where they can take management decisions. So we understand the income statement measures a company's performance over a time frame. So it tells you how much profit the company has made, what are its expenses, what are its profits. So it is a part of this thing. The income statement presents information from revenues, about revenues, expenses, and profit that has been generated as a result of business operations for that period. So it is made for 1 year, for a quarter or a month, to understand how the company has been doing in terms of, earning its bottom line or the profit. Okay, because it has to pay salaries, it has to do business, so it must know how much profit the company is making. So income statement is a very important one. So a typical profit loss account. So let's understand that. Okay, so what is a typical profit loss account? What the management makes. Okay, so it will have on the top the sales. It's simple. How much sales the company has done? Assuming the company has made a 10,000 rupees sale. A small example. Fine. The net cost of sales, which is the opening stock of the goods they have, plus the purchases they have bought, and the closing stock. So that means for making 10,000 sales, they have their cost is 4,000. Okay. The goods they purchased, and finally they sold for 10,000. So that is basically, I just remove this. So next the quiz also on the next slide. From company account. Very simple quiz. Okay, so I will just put it at the end of the class, and then you can do it and submit it after the class is over. Okay? It will be graded. I'll give you enough time, so you can do whatever. You can look at the slides also, and you will be given 45 minutes to complete it. Okay, so you'll have ample time. 10 questions, but I find the 11, so I need to check whether it's a 10 or 11. 10 या 11 questions हो गए. Simple questions. You'll be able to do it. Okay. So it's an open book kind of a quiz. You can just do it at your ease, but you will be given 45 minutes. Okay. Fine. You can even refer to your slides, whatever you want. You can complete it. So then the gross profit of the company. Is this okay? Then all the operating expenses, like selling and marketing expenses, administrative expenses. So all the expenses which company has done, advertisement, okay, and paying some commission to the channel partners for carrying out the selling their goods. Then administrative expenses, that means rent, the postage, the salaries, all the other expenses which are administrative in nature will be coming here. So total operating expenses, so which is 1500. So then we come to a bottom line. So at this, after this, you arrive at a profitable account. Okay, so your total operating expenses minus your total operating income will be your bottom line, which is called EBITDA. Okay, it's a short word, EBITDA. I'll just tell you what is the full form of EBITDA. Okay. So this is the profit which the company has earned before making any interest payment, before applying for any depreciation or amortization. Okay. So EBITDA stands for earning before interest, depreciation, tax, and amortization. Okay. So this is the company's cash profit from selling its goods and services. Whatever a company is selling, whatever the company is doing business and it's selling its product, how much money it is making out of it. So this is, if you have to look at the company and compare which company is doing better. So this is the level at which you should be looking at. Okay. Of course, we will be coming to the net profit which belongs to the shareholders, which is coming down gradually. But this is the profit which the company has made. Okay. Right. Before paying any interest, because a company can take loan, a company can do their business of their own. Right. So many companies don't take any interest. They don't take any. Sorry, they don't take any loans. So there will be no interest. So this is the profit which the company has earned from selling its products and services. It's a pure profit of the company. Right? After that, it's the distribution of the profit. The shareholders, the people who are taking loan, companies taking loan, they are paying interest, and they are paying taxes to the government. So this is the pure profit of the company. After that, they just start distributing the profit to various people. When the banks from their own, they are getting the loan, the tax to the government. And then, of course, the depreciation amortization, because we are already a cash flow for the company. Okay, so there's a hyperlink here. So we'll go to the hyperlink there, EBITDA. So, Mohit, can you read?
Yes, sir. Earning before interest, taxes, depreciation, and amortization. This figure measures the company's annual earning before the subtraction of interest payments, taxes, depreciation, and
Amortization. So depreciation and amortization is same. Depreciation is done for which assets? Tangible assets. And intangible assets, we amortize. Because both have life, so we need to amortization. Okay, you can look for the pronunciation. Okay, fine. So this is also called the cash profit of the business from doing business, from operating business. Okay? Whatever the company is selling goods and services, how much cash profit they have earned. Okay? Because depreciation and amortization is not going to take cash out of the business. So that's why we calculate EBITDA. How much company has made cash profit out of its true business, out of its business of goods, selling of goods and services. Okay. Now, EBITDA is a comparison measure when you're looking at a business performance compared to industry peers. But if you find out which company is doing better, okay, in an industry, for example, let's take telecom industry. So in telecom, which are the companies? Can you think of? There are any company you're using telecom? Which operating using? Airtel, yeah. Vodafone, Idea is Vodafone is getting us. And Reliance. So, and then we have MTN and BSNL small players. Okay. So these are all telecom players. So if you want to know which company is better, which company is more profitable, look at the EBITDA. Right? Because this is the money which the company has earned out of its operations by providing services to its customers. Okay. So it's a pure profit. After that, the profits get distorted. Because Idea might have taken loans, okay, and they were the interest being very high. Whereas Airtel might not take so much loans. So the profit will get distorted. So if you have to see which company is better, okay, fine. Because you can always pay back your loans and your interest liability can fall. Okay. So the profit before interest, before depreciation, before tax is very important. Because again, taxes are different. Right? Taxes in India are 25%, in America it's 100%. And you say UK is 20%, for example. So taxes can also distort the profit of the company, isn't it? And sometimes within India, some companies pay a lot of tax, some companies don't pay tax because they save taxes. So it is a line item where the profit is not distorted by various tax rates at different countries or of different companies. Okay. Then company is making profit, you look at the EBITDA. So which is more profitable? EBITDA will tell you that. Okay. Now, so that means what that enables you to do is compare how this is without the effects of different capital and funding structures. That means how much own money you're using, how much capital you're using. So this is the profit level before you don't pay any interest. Right? So this is not going to distort the profit. So we are calculating EBITDA before interest. So capital structure ignored for calculating this profit. Okay. Similarly, different tax environments. All countries have different taxes. So it may look that Airtel is more profitable because we have 25% tax rate. But suppose in America the tax is 20%. So there is a less tax there. So those companies will be more profitable. But that's not the case. As to, if you have to compare the business, we have to compare the profit before the tax. Okay? Fine. So find out which company is doing better. So tax benefit is given by the government. Okay? Whether you pay more or less, it's the money in the hand of the government or in the hand of the company. So then the capex, that means the depreciation. Now some companies provide depreciation at 20% rate of, some companies provide 30%, some provide depreciation on straight line method, some charge on a revenue value method. So there are various kinds of accounting policies which you can calculate the depreciation. You can distort the profit. Isn't it? So that means, so the profit of EBITDA is very important to compare the companies. And the most important is called the EBITDA margin, which is given right at the bottom, which is EBITDA divided by net sales. This is very important, so I'm going to develop that more. So what we do is, we say how much EBITDA a company has earned, divided by its total sales, we get an EBITDA margin. When I was working with ISL, so that day we were comparing how much EBITDA margin we are making compared to Airtel. We found Airtel was making 55% EBITDA margin, and we were making only 27%. So we were less profitable than Airtel. And Airtel was the benchmark at that time, and still remains the benchmark in India. So we tried to work out how can we improve our profit margin to reach to a level of Airtel was doing. But we could, increase it 30% by various activities which we do, where we are not doing, as great as Airtel. We try to improve ourselves and reach to EBITDA margin of 90%. Completely bridge the gap because there were some problems which we would they were out of our control. We will understand it. So EBITDA margin is very important. Okay. Then we go back. Okay. Then from EBITDA we reduce the depreciation and amortization. Okay. So we get EBIT, which is called the operating profit. That means ultimate profit of the company after even charging depreciation. So these two terms are very important, EBIT and EBITDA. Okay, they are the operating profits of the company. One is before depreciation, another is after depreciation. After paying all expenses, what the company is earning is called EBIT. Okay, but most of the companies compare themselves on EBITDA level. Okay, if they are very highly capital intensive, but if the company doesn't require any capital, then they will be having any depreciation. So even EBITDA will be always a very good important yardstick to compare to companies. Which companies will better, which not. So EBITDA will be for those companies which are deploying a lot of capital, because they will have a lot of depreciation, which is not going to be cash. This is just a charge which you are doing. You have incurred all the money upfront and then you are charging depreciation over the next 10 years, 15 years. So you try to calculate what is the cash flow the company is earning. So some companies look at EBITDA, some companies look at EBIT to compare themselves, depending on which industry you are. Okay. Then finally you pay interest. So you get earning before tax. Okay. After you paid out the taxes to the government, you get EBT, which is called earning before tax. Fine. And then you have to pay what? Tax to the government. So suppose the tax is 30%. At that time, the tax rate of India was 30% when I prepared this slide, but now it's come down to 25%. So then you get the PAT, profit after tax. It's called the net income, the bottom line, which is directly belong to the shareholders. Okay. Now, in India, there can be preference shareholders or equity shareholders. So in India, there are two types of shares. Mostly 99% is equity shareholders, but 1% company may issue preference shares. Okay. Where the company has to pay dividends. Whether the company, in case of equity, dividend is not compulsory. Equity shareholders can be paid, but the dividend can be paid only if the company wants. But preference shareholders, the dividend is paid. So preference dividend is taken out, preference profit for equity shareholders. So number of equity shares are 200, so earning per share will be 5. So how much company has earned? 1,000 rupees. And there are 200 shareholders, 200 shares. So the earning per share will be 5. Is that okay? So this is just a format. Okay. Then I'm just going through this. I'll come back to this later. Okay. Now we come to the most practical part of it, and we'll do a exercise today, a very interesting one, which you will understand and make slides out of it. Okay. We'll make graphs like this, right? Using the actual data of this was the old slide, which I made somewhere around 2015, but now I've completed this. This is Tata Motors. What do you find? This is the stage, 91,810 crores is the stage. The stage is going up and down, stage up. So it has gone up from 91,000 to 2,32,000, right from 2010 to 2014. What is the EBITDA margin? Is it going up, going down? Is the company becoming more profitable over the years up to 2014? More profitable because they are earning now 16%. But it was right in 2010 they were making 91.3%. So company here was less profitable, doing less sales, but as the year progressed, they started making more money and more revenue and more EBITDA margins. Right? Let's see what happened thereafter. Look at this. So this is the complete chart now, right up to 2022 estimated. Okay. Now look at this. I'm telling you what happened after 2014 with our orders. The sales started going down and the EBITDA margin also started going down. But I mean over the now it's showing a slight improvement. Okay? But again in 2022 it's estimated to be the sales is going to go up, but the margins are going to come down. Isn't it? Why so? Because most of the companies have a chip shortage. Nowadays, all the automobile companies are passing through a rough patch because they're not getting the parts, the semiconductor and the chips. They're not getting. So it is hitting their bottom line. Okay. Fine. So this is Tata Motors. Fine. And even if you look at the share price chart, you'll find that the share prices were going up, then they go down, and now then they're going up again. Okay. So we'll see that just from the moment. Okay. Let's look at Reliance. How is Reliance doing? Now it is 16. And look at its revenue. How much revenue it was doing in 2010? 2 lakh, 3,000. So 2021 was a pandemic year. Okay. So their profits were affected because of the corona. And now it's going up again. So in 2017, up to that, they were not doing so well. But from 2017, 18, 19, 20, the business started picking up. Look at the share price chart of the company. Look at the share price. How the share price has reacted to the profitability of the company. So the share price are very stagnant till 2018, and then the share price started going up. So clearly, when you make a chart of the past, you can correlate what is happening in the marketplace. So let's now open your Excel sheets now. So we find out how to make these charts. How do we do it ourselves? And then there will be an exercise which we'll be doing, okay? So you will have this. First go to screener, okay? हाँ हाँ क्लास या और मुझे वो दो क्या कहते हैं नेट दो गिव मी नेट go to screener, okay? Open the screener. Have you? Go to Tata Motors. Have you, are you getting your name on the left hand side or no? No, my name is there, okay? आपने कर लिया लॉगिन कर लिया अपने नाम से अगर नहीं करा तो आप बाद में लॉगिन कर लेना because it will help you a lot, okay? I'll tell you how. So go to Tata Motors. So Tata Motors is open. Go to profit loss account. So what you do, you just make it blank. all will be filled up in your this thing. So make it blank. Clear content. Go to the numbers and clear all the content. Okay? So that we can start filling the ourselves. उसमें जाओ, Excel sheet. Clear कर दो, once you are done, please let me know. Okay, very good. आप पते हो गए? आप भी clear करेंगे content. Clear all the context. Clear content. Slash clear. What about you? They are clear done. Okay. Now, what we are going to do is, we are going to just go to the screener. Okay. Go to the screener and pick up this and highlight this all up to TTM number. So last number is TTM, which I'll presume 2022. Because the figures are up to 2021 and 22 is the last 12 months number. So we are in 22, almost 11 months of 22 has gone by. This is the 12th month running. So I'll just copy paste this. Copy and copy paste. Have you got it? Okay. Then just unhide this, okay? So you'll have operating expenses, okay? Unhide because there are some columns which are hidden. So unhide it, operating expenses, okay? Fine. So I go back to the screener again and pick up all these expenses again, okay? Copy and paste. So Excel sheet में कुछ rows hidden है, उसको आप have you got this? हो गया मोहित आर्यन हाँ expenses लिखे हुए हैं आपका देखो column number 2 3 third number column which is hidden in your Excel sheet, open it, make it unhide, okay? Put your cursor here and just say unhide and it will get unhide, okay? You know how to unhide? You know how to unhide? Shrishti? देवांशी? तो unhide कर दो आप. तो हो गया ऑपरेटिंग एक्सपेंसेस डाल दिया आपने हो गया then so operating expenses you go back to the screener again okay so look at after that expenses are other income interest depreciation so this is EBITDA okay fine this is the EBITDA level okay so what we do is then we use a formula this minus this so you get EBITDA by just using a formula and go right up to the end. So this is the EBITDA level. Okay. Then you can make the margin. So I take EBITDA divided by sales. So then I just populate everything. So you got the EBITDA margin? यहाँ तक आ गए आप सब लोग? Calculate EBITDA by using a formula and take EBITDA divided by sales. So you will get EBITDA margin, which will be very similar to what is shown in this thing. Okay, like see, 7%, 14% here also, and I'm also getting the same thing here, 7 and 14. Okay. Look at the screener operating margin and EBITDA margin, which is the same. Is that okay? EBITDA margin. Okay. Put sign here, cursor. Then take EBITDA divided by sales. Okay, and then just copy paste everything. यहां से इसको उठा के पूरा कॉपी कर दो यहां तक. Have you got it? Okay. Then we have interest. So I pick up my, I go to screener again and pick up interest from here and copy paste. put interest here. Interest again. Then put up depreciation. So go to the screener, take the depreciation. And put depreciation here. Okay. Then EBIT, which is your EBITDA minus interest minus depreciation, minus 43. And then just copy paste everything. So this is company's operating profit. As I told you, that EBIT is after depreciation and amortization, how much the company has earned. Is that okay? आ गया? Shrishti? Devyanshi? Aryan? Okay? Done. Okay. Then pick up other income. So other income is basically money earned from other sources, okay? Which is not the company's main profit, okay? So copy and take it to other income. Then we have EBIT, earning before interest and tax. So we take this and add this. So then I'm going to just copy paste everything. आइए. So have you got the EBIT, EBT? Then tax is not given, so we just pick up the net income, okay? So we just go to the net income, profit. Okay, net income. Go to net profit. Open your Google Classroom, or students have just joined in, and download this Excel sheet. And we have to do this exercise and put your net income. Fine, so. Huh? Net income. And then you can calculate the tax, okay? This minus this. So tax will be the result, balancing figure. So tax is not given. So we will have the net income. We have earned before tax. So we will just minus and we will get the tax income. So just complete this. Alright, so if you're not following, just look at the next sheet where the answer is given. Okay. The formulas are already given there. ये आ गया आपका? So once you have done this, okay, यहां तक किस किस का हो गया? मोहित, have you done it? आपका हो गया? Just raise your hand. अच्छा, कर रहे हो अभी? कर लो, कर लो. Drishti, are you still doing it, or have you reached to this level? You are finding the text. Okay. Drishti, आप कहाँ पहुंचे? Sorry, दे हो गया. क्योंकि इसके बाद we will be going to make charts. So those students who have joined late, I'm just going to repeat that after we complete and do this exercise. Okay, fine. You can listen to the recording also. We have just put everything recorded, whatever you have missed. हो गया? Now, after you have done this, just hide. You can just stay wherever you are and listen to what I'm saying. Hide this operating expenses. इसको hide कर दो. ये hide हो गया? Okay. And even hide this EBITDA. So now we have the years, sales and EBITDA margin. Is that okay? ये हमारे पास 3 फिगर्स हैं. बाकी चीजें बाद में कर लेना, अभी रुक जाओ. अब आपने क्या करना है? आपने इन तीनों को हाईलाइट कर लेना है. हाईलाइट कर लो. ओके. आप लोग क्या कर सकते हैं? यू कैन जस्ट गो टू द रेडीमेड विच इज फिल्ड अप. टाटा मोटर्स कंप्लीट है आपके पास बना हुआ है. ओके. हाइड दिस एंड जस्ट पुट योर कर्सर हेयर एंड गो टू insert. Go to charts. Okay. And so you can just look at the charts here. So what I'm doing is I'm just looking it again. So I'm again highlighting this and going to insert a chart. So if you do this, but I'm not getting this thing, okay? So I'm just, what I'm doing is, I'll just make these 3 columns, okay? Right up to EBITDA margin. And go to recommended charts, okay? And select this chart. ये chart बन गया, okay? Then put your cursor on this one and add data labels. And put your cursor on this also and add data labels. So your chart is made, okay? Fine. So you can just take this chart and copy it on a. So you can cut this and take it to on the next charts here, okay? And copy it, paste here. So now you have the Tata Motors and you can put line on the top. Now for other chart. Tata Motors, sales and operating margin. आ गया क्या? ये बना दिया आपने? ठीक. So you got it. You can put the data tables in your system. Right? So this is basically you get a chart. आपको मिल गया? Okay, very good. आपका भी हो गया? आपने ज़्यादा फेस ले ली थी वो हाइड कर देते. तो वो सारे उससे फिर नहीं आएंगे. Only the sales and operating margin. You can make any chart you the way you want. Okay. Then you can just copy and paste on your building. So this is basically you're going to make a project, a group project which you're going to do after some time. So I'm going to explain many of the charts and many of the analysis. So you can make analysis of the company and compare it with the share price chart of the company. And so many other things you'll be doing. So you can just complete this analysis. Okay. So now what we are going to do is you do it yourself for Reliance. Okay. Go to Reliance and copy paste in a separate sheet, okay, and clear all the contents and do it for and make a this Reliance chart, okay, and you can even add a trend line also. If you just make a right click, you can add a trend line of the sales also, okay. So I'll explain so many other ratios, but just do it for Reliance first of all. आप Reliance कीजिए, take out all the, make clear all the contents